The U.S. dollar is a little change to start the U.S. session. Fed's Chair Powell will be speaking later on this afternoon at 12:35 p.m. This is the first speaking since the FOMC rate decision where the Fed cut rates by 25 basis points last week. Fed's Chair Powell described the move as a risk management move to guard against rising downside risk to employment, while inflation still remains above the 2% target. Also on the docket today, as far as Fed speakers go, are Fed's Bauman, who spoke, of course, about cutting rates, one of the first dissenters, and also Fed's Bostic will also be speaking today. So what they have to say, how they say it, and how the market interprets it is will be followed by the market. In this video, I'll talk about the technicals that are driving the three major currency pairs: the euro versus US dollar, dollar versus yen, sterling versus US dollar. So let's get started. Looking at the euro versus U.S. dollar, since the spike higher on the FOMC day, the price had been moving to the downside. But yesterday we did see a sharp rebound to the upside. Today we're near unchanged. Right now the dollar is, or the euro versus U.S. dollar is down by minus 0.06% on the day, trading at 1.17939. That is just above the 1.1788 level, which was this high going back to, well, I guess July, and then we had this high going back to July 1. So our July highs came in at 1.1788, 1.1788, and 1.1828.9. And as you can see, the price is below the top target at the 1.18289, but currently just above the 1.1788 level, which also happens to be where the 100-hour moving average is located. We also have the 200-hour moving average just below that, and the low price that we saw in trading here today did find support buyers, as did this dip during yesterday's trade. Support buyers came in near that 200, rising 200-hour moving average of 1.1725. So if the sellers are to take more control, we need to get back below the 100-hour moving average and 200-hour moving average down through here and stay below those levels. We tried it again early yesterday and on Friday, the break below those levels, but we could not sustain momentum down to the 38.2% retracement of the rise from the August low to the high price that we saw on FOMC rate day. So that still remains a key target, as is this swing area through here between 1.1730 and 1.17419. So buyers are trying to take a little bit more control above the 100-hour moving average. We'll see if they can keep that control in trading here today. Let's take a look at the dollar versus yen next. And if you look at the move since the sharp decline off of the FOMC rate decision that took the price below the 100-day moving average, it's been up. In trading yesterday, we did extend to a new high, extending above the previous highs from both Friday and Thursday. But the momentum faded ahead of the falling 200-day moving average of 148.537. The price decline took the price back below the 61.8% retracement of this range since the September high. And in trading here today, we came down toward other support target areas, including the 100-hour moving average at 147.58, 200-hour moving average at 147.41, and the 50% retracement of this move at 147.303. So this area right through here is going to be the key barometer for both buyers and sellers, with all this ups and downs that we've seen in the market going back all the way to beginning of August. We need to get below those levels to increase the bearish bias. Alternatively, if we're going to find support buyers like we did near the low today, just below the 100-hour moving average but above the 200-hour moving average, the bias still is more in favor of the buyers in the dollar versus yen. So be aware of that dynamic. Obviously, lots of choppy action here as the market digests all the central bank policies and the Federal Reserve shift to lower rates. But that shift to lower rates hasn't necessarily led to that lower dollar. Instead, we've seen more upside potential for this pair, and the bias does remain more in the positive direction, ahead of the 50%, ahead of the 200, with the price ahead of the 100-hour moving averages. But finally, let's take a look at this sterling versus US dollar, and looking at this price action trading here today. The low price came down to retest the 100-day moving average. Last week, the price on Friday fell below that 100-day moving average after trying to test it there, but came into this swing area here between 134.50 and 134.67, found support buyers and pushed back to the upside in trading yesterday, getting back above the 100-day moving average in the process. So the dip down to the 100-day moving average and the successful hold of that level keeps the buyers in play. If it would have broken below that level, we would have been back below the 200, back below the 100-hour moving averages, and back below the 100-day moving average. So that would not have been positive from a technical perspective. But holding above that level keeps the buyers in play. We're still below these upper moving averages up here between with the 100-hour moving average, 200-hour moving average looming above. And ultimately, if the buyers are taking control, we need to get above those levels and stay above those levels to increase the bullish bias. So now, if you have an inkling to buy and want to sell the dollar, this was the level to lean against for in the pound versus US dollar, and successfully held that level. We'll see what the Fed chair comments and other Fed officials today due to the price action in the US dollar. So be aware, be prepared. We do have the S&P global PMI flash manufacturing index coming out at 945. We also have the Richmond Fed composite index coming out at 2, and a 2-year note at 1 p.m. today. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.